Sound? All right, how's that? We have sound? All right, there we go. Hope everyone's doing well. Happy Monday, everybody. Welcome to Charts and Coffee. We are embarking on the last week of the quarter. And this is not just any shift from one quarter to the next. This is the shift from Q3 to Q4. This is bottom picking season. You'll notice that in the seasonals. You'll notice that in even the way the seasonals are syncing up with the FOMC, even with the seasonals and the FOMC are syncing up specifically with the NASDAQ. If you did not already check out the Sunday top tier outlook, it gave you a really good glimpse into the detail of the top tier outlook newsletter that is going to be published just in a little bit later this morning. In the top tier, by the way, my Sector Secrets Mastery folks, you have instant access to that. It is included in your subscription. For those of you that are subscribing, what is the goal of that newsletter? Every day to talk about what are the tactics that are working. Yes, I could scan a million markets and give a million levels, but who cares? That's analysis. Analysis is fine. Trading and trading ideas are better. And that's always what we want to focus on. What are we doing this week? Where should our focus be? One of the places we should not be focusing is the RTY. Another place we should not be focusing, and I get a lot of questions about these, are things like gold. Right now, leave gold alone, leave bonds alone. I would say of the three, the one that looks the most interesting potentially would be let me show you what bonds look like. And you say, okay, what would be most appealing? Bonds are in a downtrend, gang. Yields are on the climb. Whether this is because bonds are reacting to rates being higher for longer, which right now they are expected to be, will pause according to the Fed Fund futures into the end of the year, but will stay at that elevated, hiked up level until about July, the July meeting of next year. So remember, where bonds go, gold tends to follow. What is interesting about gold, and it is worth mentioning, is that if you take a look at the entirety of the year, one thing that gold has not done, it's offered very limited opportunity, but one thing gold has not done is broken the 200 and stayed that way. It gets there, it pierces, but it bounces, especially when the propulsion dots are present. Now, what are the propulsion dots? It's a really easy and elegant way to recognize a fast and slow exponential moving average cross. So in this case, I want to know where the 200 is, right? Where is that 200 exponential moving average? So where the dots are, imagine it like a dot to dot, right? You remember those as kids? I loved those things as a kid. That's where your dot to dot is of the 200. But when it disappears, that means the 8 and the 200 are no longer interacting in a way that suggests a really firm hold. You'll notice when the dots are there, it tends to hold a little bit better. It tends to hold a little bit better, and the dots are back. So just be aware of where that 200 is, whether you're using propulsion or not. But by the way, this is a free indicator. This is one that's available for free on the TradingView platform. And this is available free within a suite of indicators we call the top system. And that is the Wave, the Grab, Propulsion, and Darvis 2.0. This will work with anything you're doing, whatever set of indicators you're using now. None of them are going to be any worse for wear. In fact, they're going to be that much more, actually accurate and well applied if you've got tops, because tops' whole job is sort of what's the temperature like, right? It's kind of like, oh, where's the wind coming from? Yes. If you've got that first before you embark on any setup, on any trade, you're always going to be better off. Always know the structure, always know the environment you're trading. That is the job of tops. So you can see here, when people ask me about gold, that's about the only thing, right? But the best looking corner of the market is the NASDAQ, gang. That is the best looking corner of the NASDAQ. Within all the chop, the Dow is, I would say, not as favorable as the S&P, and the Russell's hardly favorable at all. Think about what is still above the 200 and ripe for bargain hunting, not trying to buy into a downtrend. So that's a very fine line. And you might say, Rog, how do we know the difference? It comes down to the indicators on your screen. Be very discerning about that. A lot of folks will say, Rog, you got a lot going on your screen. That's like walking onto a giant jet that's going to take you somewhere and telling the pilot, gosh, you have a lot of gauges in there. And the pilot's going to say, it looks like a lot because, well, you don't know what they mean, right? With a little bit of training, you know that each gauge has its job. It's the same thing with trading. All right. With that being said, by the way, I just took off the grab candles just for giggles. All right. Not that there's anything wrong with red and green candles, but really, what does that tell me? I'm going to put the grab candles back on. And this time I'll do so without the wave, right? Which is fine. I think if there's anything that you want to remove in a non-trending environment, let it be the 34 EMA wave, right? All of a sudden I know, oh, green is bullish, blue is neutral, red is bearish. Got it. So you can see it's very choppy. And ultimately, even as a day trader, when I see dark red, dark blue, dark green, that means something entirely different than light green, light blue, light red. So I had a glimpse, right? I know a little bit about even what I'm going to be dealing with as a day trader. And day trading has absolutely been most of what we have been doing, right? So as always, gang, if you have any questions, feel free to type them on in as we kick off the morning. We are looking at weakness in the NAS. We are looking at, the NAS is probably the least weak, interestingly enough, on the 5-minute. Going back and forth between chop as opposed to the ES. Look how beautifully the multi-trend just makes it very objective. It's just binary. What color is it? Solid red, far more bearish than the NASDAQ. Dow is the same way. All right, first question is, hey there, Ryan, how are you? Can I take a look at COF for a short on the daily? Okay, cool. Hey, Ryan, I just want to also mention that when we look at swings, right, which if I'm on a daily time frame, I'm going to presume I'm going to end up looking to the 1 hour too. If I'm on a daily, I'm also going to presume I'm going to take the trade overnight. So interestingly enough, on COF, you'll see there on the charts, and I've got the 5-minute kind of squished over to the left side, and I've got the 1 hour in the daily. Daily is very much in a downtrend. 1 hour is also in a downtrend. In the trend, I would tell you, it makes sense to turn the wave back on, right? So if I don't have a trend, the 34 EMA wave is not that mean reversion zone that I'm really interested in. But in the context of an up or down trend, look how beautifully it gives us structure. Look how beautifully when we break the wave, look how the weakness came in. When we broke the 200, look how the weakness continued. Look how the 200 is keeping price from moving higher. And look at the rejection either near the 34 EMA wave or right in the mean reversion. That's what I need. I need something like that. And let me show you what I mean. If you look at your charts, Ryan, go take a look at the 15th of September and the 6th and the 18th of September. Both those days moved up into the 34 EMA wave, which is the 34 EMA on the high, the close, and the low. That's a mean reversion. When am I looking for mean reversions? Exclusively within the context of a trend. Up or down, doesn't matter. It's got to be a trend. And I know it's a trend because of, thank you, multi-trend. Solid red. This red means we're moving down, right? So keep an eye on this lower row. When I start talking about market structure, that's exactly what I'm looking at. So yes, I like that short setup, but we need it to bounce again, right? And I know a lot of folks in the Sector Secrets Mastery said, yeah, Rog, we know it. I like it a lot, but it's got to bounce. Or I like it a lot, but it's got to pull back. Yes. There is rarely a higher high or a lower low that I'm going to act at. I'm going to look for retracements, reversions, pullbacks, bounces. Gang, entries are everything. Entries are where we manage risk from. Don't get suckered into analysis that parades around simply as calling targets, right? Most analysis are Babe Ruth at the plate pointing to the bleachers. That's what they think. And you know what? People love that stuff. Oh, but so, what if I sat here and told you COF, Ryan, rather than breaking down the entry? And I really want y'all to understand what you're up against. You're up against a whole host out there in the financial analysis, financial trading world. They're going to say, Ryan, I think COF is going to go to 80 based on fill in the blank, right? Is that a setup? No. And do I know that it's going to go to 80? Of course not. As I like to tell folks, do you know what you're going to have for dinner on Friday? Oh, even better. Could you tell me what the score of the football games are going to be on Sunday? Well, Rog, that's not for 6 days. How would I know? Exactly. And yet, grown adults, believe that someone on television is going to tell them where a stock is going to be or an index is going to be 6 months from now. Right. And that's kind of where, especially when we go into year end, we're going to get so much of that nonsense. Be careful of folks giving you targets as trades. They are absolutely not. Right. So all I know, Ryan, is when it gets back up into that zone and it's still a red trend, that's where I'll short it. And I won't look for it to make any more than a move to where it came from. Okay. So, hopefully I don't sound like some crazy woman talking about what you're up against. Because believe me, gang, I've been doing this for 30 years. The nonsense that's out there is pretty intense. And as we go into the end of the year, the nonsense only going to ratchet up. So be careful. All right. Be careful. It is a world out there that wants you to know that certain people can see the future, but not you. Right. All right. So, and by the way, none of my career has ever been predicated on being able to see around corners, right? None. This is one great market. When we're talking about trends, I at least want to show you all an uptrend. This is crude oil. Crude oil continues to defy whatever concern there is about the Dow, whatever concern there is about the economy. Crude continues to rally, right? That means all the news that we're focusing on is bullish, and most of the news that's out there is also bullish, and crude just continues to rally. If crude is going to rally, much like if I were looking at the NASDAQ bullishly, I would look at tech, XLK bullishly, and likely Apple and Microsoft, index sector stock. Within the energy world, crude oil, then I'll go into the XLE, and then I'll go into, say, Chevron or Exxon. So if you're looking for trends that have been a little bit more resilient in this environment, look at those trends that are relying on the strength overall in crude oil. This is also the USO ETF. This could also be micro crude futures for those who like to trade futures. Of course, crude oil futures, the full-size CL, Exxon, XLE. Even keep an eye on some of the names in the XOP. This is the oil and natural gas. I don't like XOP as much as I like XLE. And then if you take a look, one quick glance at this, right? Take a look. I hope it's starting to click. Green, uptrend, yellow, sideways trend. Do I still want to be a buyer? I would prefer to be long than short, but this is no longer an uptrend, right? This is now moved into chop. XLP is a great way to take advantage of names that are related to both gas, natural gas, and oil. All right. Okay. Next up, Kay Harper asks, is the S&P daily a buy? All right. So let's jump on over to the S&P daily. So whenever I'm looking at any symbol, again, you mentioned daily, so thank you for the specificity on the time frame. All right. The next thing I'm going to look at is what's the structure of the S&P? I'll tell you this much, Kay. For those of you using the daily price movement ranges, the DPMRs, you'll notice this gray zone. And in the context of chop, which you can see here, look at all this yellow. This is chop, right? It doesn't mean that every single visit to the gray zone is going to make sense. I want to find the low on the slow stochastic corresponding with the gray zone, right? The low on the stochastic corresponding with the gray zone, whether that be here, right? That's the idea. When we get to a sideways market and we're at a high, and that corresponds with the yellow zone, right? Do you see how that works? It's not that every single visit to every zone is a setup. No, not at all. Not at all. So knowing what's happened previously and then applying that to now, right? Applying that to now, once again, here we are. There it is. And as long as we remain yellow, yeah, I would look for a possible move to the upside. This is the end. This is the last week of the quarter. It could be a tricky one, but if you're asking me, are we nearing a support zone on the daily chart? Yes, we absolutely are. And it's a support zone that not many traders are actually going to see, because you'll notice it's not corresponding necessarily strictly to support, which we could easily see here on the Darvis, although Darvis is doing a great job of showing where support could be, but it's just this zone just below the Darvis and still above the 200 that lends this lends a little bit more bullishness, a little bit more optimism to the upside in the S&P. So yeah, I would keep an eye on that. All right. Ben asks, I'm short 200 shares of RCL since Friday from 91.87. What's my next target? Ben, I would hope, if you're asking me what my opinion is, that's fine. I would hope you have your target already in mind. You have a nice breakdown through the low at 94.56. So I guess the first thing I want to mention, Ben, since you sort of opened the door, is I would be remiss if I didn't at least mention, I don't know what time frame you set that up on or even why, but let me just give you my why, and then you can kind of connect that with yours. This is the Darvis support level, right? I can't say that I'm going to be shorting something like this. I would be looking, and I can't even say I'm actually focusing on something like RCL. However, if you're looking for a market to slip below support and keep going, one easy way to do that is look at where support is, and when it breaks, you've got to move lower. Okay? So when you look at, for example, the RCL, here's your support level, right? Here's your support level. So when that breaks, and that support level, for me, if you're looking for the short side, that's going to be as it breaks down below 94.50. Okay, which is a very different fill than 91.87. Again, not knowing what time frame or anything, I'm just going to have to extrapolate. Okay, the next thing I can do is shorten my chart time frame to 1 hour. And on the 1 hour versus the dailies neutral. So I'm really not allowed to short. Not yet. Okay. However, the 1 hour opens the door to it beautifully. So let's say you set this up on the 1 hour. Let's go back to the 1 hour. Let's go back to that same idea of the Darvis. Here's your breakdown just below 94. So I want to show you where, I can get you some better pricing. Or if you're in a downtrend, you short the resistance of the level. So you can short into resistance, or you could short as we break down through support. That's the difference between an exhaustion trade and a momentum trade. They're both fine within the context of a downtrend, where on the 1 hour, it looks more likely that we're going to continue to see lower lows. So I agree with you. I'm going to look at the 1 hour to see what a different view I have of swing trading when I go from, say, a time frame that's going to set me up for a 2 to 10 day window versus a 1 to 3. So cool trade. I would set this up on the 1 hour. I'm actually not allowed to set it up on the daily. I think the 1 hour gives you a very good way to manage two kinds of entries, break of support or a short at resistance, with a downtrend. So that's where, if you're looking for overnight trades, gang, looking at 1 hour for that 1 to 3 day window and daily for 2 to 10, just that little shift. That's it. And I'm not going to bring up monthlies and weeklies and 30 minutes and 50 minutes. That's it. 5 minute, 1 hour, daily. And that's going to be where I'm going to look for the best market structure. Okay, gang. So thanks as always for the questions. I'll see you tomorrow. Same time, same station. Thank you for smashing the like button. Thank you for leaving any comments or questions or requests below. I do check them out here at the YouTube channel, both here at Simpler and my YouTube channel over at Raghee Horner. Be good to each other, gang. It's going to be a week rife with shenanigans. We've got a lot of data, PCE. We have a Powell speaking engagement. We've got a lot coming up as we wind down the quarter. All right, gang. Be good to each other.